My name's James Seyffart. I'm a research analyst with Bloomberg Intelligence. In this space, you probably know me for covering the Bitcoin and Ethereum ETF launches. Today, we're going to talk about staking, unintended consequences of digital asset ETFs, mostly around the potential centralization aspects that they're having, and we'll get into a little bit about what ETFs are coming next, what assets are going to be, when is staking going to be allowed, and yeah, I'll let Hadley introduce himself briefly too.
Sure, great to be here today. Hadley Stern, Chief Commercial Officer at Marinade, leading Solana staking provider. Also been in the TradFi crypto space for some time, and really excited to dive deep into this world of ETFs where we have this intersection of TradFi and DeFi and what it all means. So maybe I'll kick it off with a question to you. I think we're going to go back and forth here.
Yep.
So one question I have is, why do we need crypto ETFs?
I mean, and I guess in an ideal world from like the crypto ethos, you wouldn't. But I mean, if you go back like to Bitcoin talk forums as far back as like before 2013 even, they were talking about eventually there being a Bitcoin ETF. I think we're talking 2011. The Winklevoss twins tried to launch one in 2013. Why do we need them? Really just because the infrastructure at the time, now it's better. You could probably set up direct investment if you're an investment advisor. That market, investment advisor, wirehouses, investment platforms, there are trillions and trillions of dollars there. And they are used to using ETFs. They are the biggest users of ETFs, whether you're looking at an equity ETF, a bond ETF, or a crypto ETF, it doesn't matter. They like the wrapper. A lot of people think of crypto as like this whole new asset class, this whole new technology. ETFs were that in the early 90s, right? They completely changed the way that things were traded. They completely changed the way that you invested in pretty much anything. And they've done the same thing with crypto. I mean, if you look at the Bitcoin ETFs, you're combining both of these technologies in a way. Bitcoin ETFs were the fastest ETFs. IBIT specifically was the fastest ETF to 70 billion. They did it in under 300 days.
Yeah.
The next fastest was, I think 2,000 days, something like that, 1,400 days. So, I mean, the real reason you need it is because there's plenty of people that are on those old traditional financial rails, and what the ETFs do, and what is going on in this world right now is they're taking assets both from DeFi and putting them in TradFi. We're also seeing their inverse with stable coins, tokenized money market funds, and things like that. But the ETFs are really good at taking this DeFi asset and putting it on the traditional financial rails for anyone who isn't ready yet to jump to those DeFi rails.
So yeah, they're really good, so good that 6% of Bitcoin is now tied up in ETFs, and most of those are custodied at one provider. So I'm not Satoshi. I'm making that announcement here publicly today. But if I were, I think I would be sitting back in 2008 and thinking, I'm mining all this Bitcoin, no one's buying it, zoom ahead to 2025, and 6% of this Bitcoin is now custodied at one place and available through TradFi vehicles. What does that mean for decentralization in Bitcoin if that number goes to 15, 20, 50%? Does it matter?
I don't know at what point it matters. There's probably a level that it matters, but I don't think we're anywhere near it. Because, I mean, specifically with Bitcoin, it doesn't matter because it's not the way it's set up, it's proof of work, right? The miners are the ones that control it. The nodes control how the protocol works. So the centralization of the ownership of the ETFs is not going to impact the underlying protocol, right? So like the ETFs themselves, a lot of people have always been worried against this. Yes, it goes a bit against the crypto ethos, but also it's a free market. So the market tends to be more libertarian, but it's a free market, and obviously people find value in the ETFs. One thing that I think this industry can learn from a little bit is like sometimes people are willing to pay up for convenience.
Yeah.
Right? The simplicity of just clicking a button and getting exposure in the way that they're used to getting exposure to assets is something they're very much willing to pay for. And that comes through in the way that we've seen Bitcoin ETFs take off, even Ethereum ETFs to a lesser extent. But people need to learn. But again, I don't think it's a problem now. I don't foresee it becoming a problem. Come back to me in 3 or 4 years, but they're taking over as far as gobbling up a ton of coins, and you combine that with all the Bitcoin treasury companies and other crypto treasury companies, and there's a lot of centralization aspects happening in the crypto world.
Yeah, I think Gemini recently came out with some data. I think it's 32% of Bitcoin is held by centralized entities, 216 of those. So, once you include MicroStrategy and other elements, it becomes pretty big. So Shifting a little bit here, because obviously Bitcoin and ETH have been out, ETH without staking. What's the rest of the year look like in terms of ETF approval? So I want you to give me the sunny day scenario for, let's pick Solana, because we love Solana. Sunny day for Solana ETF and rainy day for Solana ETF.
So sunny day for Solana ETF in my mind is they could get approved this summer.
Okay. Summer, July 1st, August 15th.
More like, all right. So there's like 10 different assets vying to be in the ETF wrapper right now. I can rattle them off here. So we have the basket products, which are actually due for a decision from the SEC by July 2nd. So mainly Grayscale's GDLC, which holds the 5 largest cryptos. Bitwise's BitW is also in there. Hashdex, another provider, is trying to launch an index fund. So index funds are likely, in our opinion, to get approved this summer. If they're not approved on this first date, it'll only be because the SEC isn't ready with the full framework, right? So there's 2 ways those index products get approved, which holds Solana, is the SEC basically says there's such a small part of the index, because the index is 90% Bitcoin and Ethereum already approved, we're just going to let it through. Or before July 2nd or sometime shortly after, they come up with a framework. I think they need to come up with a framework. So potentially they could say the framework's not ready, we're not ready to launch this. Doesn't matter. 2025, in my opinion, is mostly a done deal for the vast majority of these assets.
So the first tranche, to be clear, that you believe will be approved are these index basket funds. They're next before, say, Sol staking or ETH staking?
Yeah, so the final date, the SEC has to make a decision by July 2nd. My base case is the first one, Grayscale's GDLC, is approved on that date. But I'm not 100% confident.
Yeah.
I am pretty much 95, our odds are 95% by the end of 2025 that it will be approved. So they could say we need to come up with this, this framework before we approve these ETFs. But we have Litecoin, we have Solana, XRP, Dogecoin, Cardano, Polkadot, HBAR or Hedera, Avalanche, Sui, and Tron. All have dates in 2025 or early 26 that the SEC needs to decide on. But they're going to come up with a framework that says like what can go into an ETF wrapper. So they could just let all these things go live this summer, or they might just wait till their deadlines, and the deadlines for most of them start in October.
And so let's talk about staking in ETFs specifically. So, Ethereum ETF was approved conditional of removing staking from the ETFs under a previous administration. How is that, do you see that rolling out? Does the SEC approve staking writ large, or do they do ETH staking first and then do Solana staking?
It's a really good question. My base case is staking is going to be approved for ETH and Solana no matter what this year.
Yeah.
I think it could happen this summer. We saw just a couple weeks ago, the SEC went to all the issuers that have filed for these Solana ETFs and basically said, come back to us, refile your prospectus documents, include staking language. And I think for them, they're knocking out 2 birds with 1 stone. 1, it's a new asset class, and 2, they can see the type of language that they want to put in these documents for staking, and they can work on that. If we're going to get Solana ETFs launched, they're going to launch out the gate with staking, is my base case, this year. And I think once that happens, they could also approve Ethereum staking at the same time. It might just take a little bit longer to get them approved, but Ethereum ETFs will be staking this year as well if the issuer wants to allow it. So staking is going to be approved this year, 95% confidence in that.
Okay, I've been hammering you. Your turn.
Yeah, so you guys partnered with Canary, which is one of these issuers that have filed for all these altcoin ETFs.
Yeah.
Stephen McClurg is running that company. He's been involved and around the space for a long time. I'm most curious to obviously I'm saying staking is going to happen. The ETFs are going to be able to stake. How much they can stake, what the yields will actually look like, how it will work, that's unknown at this point. So I want to hear from your side. You guys are partnering with Canary and BitGo to operate this ETF via staking. How does that actually work in an ETF wrapper? I'm sure everyone here knows at least roughly how staking works when you're running your own node or going to a staking provider. But how is it going to work with an ETF? Do you know what limitations there are going to be? How are you going to partner with BitGo?
Sure.
What does this look like?
Yeah, so what it looks like in many ways is quite straightforward in terms of an individual or someone staking, in that the ETF fund will buy Solana and they will stake Solana. And with Solana, in every 48-hour epoch, rewards are delivered back to the wallet. And in this case, they'll be returned back to the fund, which will be returned back to the clients. There is some questions, and this is more of a product question, but also tax question around Will those be delivered every 48 hours, or will they be wrapped up and delivered monthly, or something like that? But that's basically the construct. What we're, Marinade specifically is concerned about is continuing to support decentralization. So, we talked about the risks for Bitcoin if, say, 30% of Bitcoin is custodied by Coinbase. With proof-of-stake networks, the challenges are even more so existential. You do not want to have centralization of validators. So what we're trying to avoid is a situation where the top 10 ETFs all have Coinbase, God bless them, as a staking provider, and suddenly we're in a 6%, 10%, 20% scenario of Solana locked up on one centralized entity's validators. So to solve that, we created Marinade Select, which is a pool of 20 to 30 professional validators that go through compliance checks and KYC. And so the Canary Marinade Fund will be powered by Marinade Select, meaning when someone buys that ETF and the fund stakes, that Solana stake will be distributed equally to 30 validators. So there's contingency advantages to that, there's risk advantages, and there's also decentralization protection. And we're also in conversation with a number of other ETF providers as well, so it's not just going to be Canary Marinade.
Yeah, I would agree. I mean, you look at this and you were talking about like the Bitcoin centralization. I agree. The proof of stake side of things is a little more scary if, Coinbase is the dominant custodian of Bitcoin. If they are the same way with Solana, I mean, they are the custodian for the vast majority of the ETFs, at least the assets. But we also have Gemini, we have BitGo in there, you have Fidelity, Trump's new filing, or I guess I should say Truth Social's new filing, It's going to use crypto.com. So like, are you guys set up with all these different custodians, or like you mainly partnered with one, or
We're in conversations with others. We're Zodia and Copper, which is UK market, although Zodia is going to be coming to the US, BitGo here, and in conversations with the other as well. And of course with Coinbase, but that's a broader business conversation over drinks perhaps, around again their openness to work with the ecosystem. But that's one of the reasons why we're here today is we just believe very strongly that in this marriage of DeFi and TradFi, we've just got to make sure that we're mindful of unintended consequences of big business coming in and releasing products, which I think is healthy. But again, there starts to be these existential questions. Now, I don't know who solves it, and I've been in meetings with the SEC, and some of these conversations have come up where it's like, well, is it the SEC's role? Which is kind of an interesting question. In Japan, the regulators there regulate cold versus hot. So in Japan, if you're running a fund or equivalent of an ETF, you have to have 90% in cold and 10% in hot. That's an example of a regulator getting deeply involved. I'm not sure who does it. I mean, I think it would be kind of a bizarro world if the SEC is the one defending decentralization. But when you think about the role of government and monopoly protection, maybe it's not such a bizarre idea. Who else is going to do it?
I mean, the industry could do it.
The industry could do it, but reading the tea leaves right now, I'm not sure if that's in contradiction with how the industry is going in terms of even the Genius Act really protects centralized businesses that have grown and emerged and builds a moat around the stablecoin market. So, that this is a question around technologies are agnostic, right? And so who's gonna protect them?
Yeah, I mean, from my point of view, I guess the way I think about it is like, I don't even know how it's going to be solved. I mean, there's this centralization aspect that happens in all industries because as you get bigger, you get more scale, you can offer lower costs, you get more customers, and so on and so forth. And we're seeing that on the ETF side of things. We're seeing that on the the custody side of things. So it's kind of hard. This whole industry is kind of pushing back against that entire ethos, and it's not going to be easy, particularly if billions of dollars are flowing into some of these other products. Though, I mean, we can get into demand of where we see these other ETFs going, but I don't think we're going to see the same level of demand that we saw for Bitcoin.
So just a random question somewhat. Is there precedence in other ETF products around this? Like in gold ETFs, is there a question around who is the supplier, or I guess not really, right?
No, there is actually. So in gold ETFs, it comes down to the custodian. So if you're a gold bug, first of all, you think the gold ETFs are stupid because you want the physical gold so that the government, can't take it and seize it and what have you. So they're like against ETFs in many regards, even though they've been a great force for people getting exposure. And just for people getting exposure to gold, it made it very easy. You could get exposure to gold in an ETF, where as a retail investor couldn't do that before 2004. And gold ETFs have been tremendously successful. But there's ETFs out there that they have diversified custodians. Most of it's held in vaults in the UK, so under London. But there is one that holds the gold in Switzerland, and it charges a little bit higher fee for that. But there are people that are willing to I'm going to hold this gold ETF here in the UK. I'm also going to hold this gold ETF here in Switzerland. And there was a gold ETF that now used to be held at the Perth Mint, but is no longer there.
I mean, I know MicroStrategy, for example, it's public. They use multiple custodians for this reason, right? It's another risk mitigant across there. Okay, so let's talk. All these ETFs are approved. The ETF hasn't had much action. Now, I don't know whether that's because ETH is on a downslope with all the competition for Solana. Are there other reasons why? Do you see that changing once staking is approved? And what does that mean? How do you read that as how Solana ETF is going to do?
Yeah, so figuring out demand is very hard. We were very bullish in the Bitcoin ETF demand, way more than any of our peers in TradFi, and we weren't anywhere near bullish enough. Even all the issuers weren't bullish enough for that. And we were pretty bearish on a comparative basis to Bitcoin. I was thinking 15 to 20% of the assets and flows. We got way less than that. I mean, we had net outflows before Trump's election. Now they have a few billion that has come in. They've done very well. The problem here is everyone, if you're in this space and you don't know a lot about ETFs, you look at the Bitcoin ETFs, and you look at the Ethereum ETFs, and you're like, what a complete failure. And it's like, if I told you could launch an ETF and get $10 billion in there.
That's not a failure.
You would do that in a heartbeat, no matter what you're charging, right? But compared to the Bitcoin ETFs that's taken in 45 billion and you're taking in a couple billion in flows, it looks bad. So one, I do think staking played a big role. I do know for a fact McClurg, Steve, didn't launch an Ethereum ETF solely because the SEC wasn't going to allow staking. And I tend to agree with him, because if you can get exposure to Ethereum where you can get yield via doing DeFi or staking, obviously, it makes way more sense to go that route. So the only people that are buying the ETF are A, they don't know how to get exposure to spot Ethereum or don't understand staking, or B, that their protocols don't allow it.
Or C, they're using assets that they can't use to buy crypto, like a rollover IRA, right?
Exactly.
That's the big.
Yes. So they're forced into this funnel in the way that some people are forced into buying some of these treasury companies in other countries, right? They just no other way to get the exposure. So I think that hindered the demand. So I think once you get staking, it'll do well. I think that if Solana ETFs had launched without staking, it would have been a bigger hindrance because the yield is so much higher. If you're trying to get exposure to an underlying asset class and you're just investing in the asset class and there's an underlying yield, that's like putting cash under a mattress and just letting it sit for a few years. If this is a long-term buy and hold investment, that's not good. You're going to pay a fee for them to hold it for you. All these funds have expense ratios, and then you're going to miss out on the yield. I mean, in Solana, that would be awful. You would drastically underperform a total return exposure.
Yeah, interesting. And then also you'd lock up a lot of SOL that couldn't be used for the network, which would also not be good. Are you seeing any ETFs that are mixing crypto and gold, for example, or this idea of I don't know, a prepper ETF, which is gold, Bitcoin, silver? Yeah,
they are out there. There was ones that were out there with futures even before we got spot. But what we find in the ETF space, and we can this actually can come into demand for what we're seeing for crypto, is people like to pick their exposures, right? So if you look at the total world stock market ETFs, those assets are dwarfed by the assets in for US investors picking US total stock market and total world stock market ex-US, because they want to pick what their exposures are. Even they want to choose large cap versus mid cap and control those ratios. So if you're an advisor and you just go to somebody, for crypto it might be a little different. You might just buy one of those index funds. So for that reason, I think the crypto index products could be the second or third largest category. So they'll either beat Ethereum or be third to them for the foreseeable future, because it's just easier. I'm going to put 5%. I'm just going to buy this one ETF and be done with it. But if you're an advisor and you're trying to show that you know what you're doing, you don't want to just hand over a client and say, here, I have you in these 3 ETFs. They're like, I could do this. Why am I paying you any money? So there's a reason to make it a little more complicated than it actually is. So I think that's going to play a role here. There will be some advisors out there that if they're looking to get exposure to the crypto space, they might just buy an index fund. Some of them might toy around with some of these other assets.
I mean, the other thing I'm curious on the advisor side, because Bitcoin has emerged, even though its original idea was as a replacement for cash, as digital gold. That's the dominant hypothesis. Solana and Ethereum are emerging as a software platform. It's almost like buying a tech stock. How sophisticated is the average ETF buyer out there? They see Solana announced, and they're like, are they thinking, oh, this is just another Bitcoin? And how should the industry help there?
It's a bell curve. For the most part, people don't understand the space in the advisor world, right? So they're just thinking, I think a lot of it is now Bitcoin and crypto. When I talk to advisors who are interested in learning about the space, that's how they're thinking about it. So I would be interested to see, right now, all the filings for the index funds they include Bitcoin and Ethereum. So you have Bitcoin and Ethereum that make up, Bitcoin's 70-something%, Ethereum is 11%, and then you're at 90% of the fund. I think we're going to see products launch that will be, market cap weighted X Bitcoin, essentially, and allow people kind of what I was talking about there. I think that if I were an ETF issuer, that would be what I would launch, because as an advisor, I'm like, I want to know how much Bitcoin I have, and then I'm going to play like the other, decentralized DeFi world.
Yeah, it's interesting to see the amount of thematic ETFs that will come out and how they'll mix and match everything. And then on the, back to the Solana side, so do you predict that it will be bigger kind of between Bitcoin and Ethereum, or like this is going to be a lot of product for the market to consume, right? We're going to go from 2 to like what, 3, 8, 10?
Yeah, I mean, we're going to go from 2 to probably 12 within the next year.
Yeah.
Different assets that have exposure, plus the basket products. I mean, the ETF industry is known as like a spaghetti cannon. You kind of just shoot a bunch of spaghetti at the wall, and whatever sticks, you keep supporting.
Crypto's pretty good at that too.
Yeah, and crypto's very good at that too.
So that's a marriage made in heaven.
That's what's going to happen. I always thought, people were saying there's so many Bitcoin ETFs, one of them's going to close.
Yeah.
I didn't think that from the get-go. I thought there was enough demand that if they get enough assets out the gate, they would be okay. Obviously, the price of Bitcoin has helped them, but it all goes back to that framework, right? Like, what is the SEC going to look at? What are they going to allow to be approved? I think we're going to see rumblings of that framework in the next few months that will tell us like what assets are going to get approved. Things they'll look at is like, is there a CFTC regulated futures contract? Most of those ones I mentioned already have it. What is the market cap? Is it big enough? All the ones we're talking about are big enough. All these different things, right? Is it low float, high FDV? There are a couple on there that might have an issue with that if the SEC decides to care about the low float, high FDV side of things. So there's a whole bunch of ways that you could think about this, but they're coming.
Well, this has been a fun chat. So you can find me, marinade.finance, Marinade on Twitter, at Hadley Stern. Where can people find all your extensive knowledge on ETFs, follow you on Twitter?
Easiest spot is Twitter, obviously, JSEYFF. I am a little more liberal with sharing our research than I should be, but that's okay. Obviously, if you have a Bloomberg terminal, this crowd I know might not necessarily have that, but that's where you can find most of my stuff. That's where the in-depth research goes.
Awesome. Well, this was a lot of fun. Thank you.
Thank you, Hadley. Thanks, everyone.
Stand up.